Well, this new year is bringing some mixed feelings about the state of our economy. Consumer spending was down for the last 2 months. Home prices continue to rise despite a slowdown in buying. According to a real estate research company, homes sold for 21% more than the previous year. And in the labor market, we know Walmart is boosting wages for its workers. Boeing also announcing plans to hire 10,000 new employees. And meanwhile, thousands of tech workers, as we know, laid off at companies like Google, Microsoft, and Amazon. And while inflation is cooling, it's still rising at a more rapid rate than normal. It's a whole lot. And joining us now to discuss this, the CEO of Prosper Trading Academy, Scott Bauer. Scott, thank you for being here.
Of course, thank you.
So there's a lot to unpack. First, I want to ask, what are your thoughts as consumer spending is down, inflation is cooling slightly? Do you think this is a good sign for our economy this year?
Well, listen, we're kind of in this period where good news is bad news. We want to see a healthy economy. We want to see people spending money. However, what the Fed has been doing over the last year by raising interest rates as quickly and as much as they have is they're trying to slow the economy down. And it seems like it is finally working. But again, if you think about it intuitively, we don't want the consumer slowing down because that means things are pulling back a little bit, but we need the consumer to slow down. So I think we are on the right path.
Do you think we are seeing a shift in labor demands as tech companies are announcing those major layoffs? And then we have Boeing, on the other hand, hiring thousands of new workers, Walmart with rising wages as well.
Yeah, that's a tough one because as much as the Fed wants that to happen, and what we've seen over the last few weeks, like you said, with tech firms like Google and Amazon and pretty much everybody except for Apple, there's been these massive layoffs, but then you have retailers and Boeing. So I don't know that we've seen this slowdown. And in fact, last week's on Thursday were the weekly jobless claims. These are people that are filing new claims for unemployment. That was the lowest since April of last year. So that kind of tells us that the labor market is still incredibly strong. But this coming Friday, we will get the January jobs report. And the market's going to be watching that closely to see what is going on with the labor market.
And meanwhile, housing prices up considerably, 21% higher than the previous year. And then there's the slowdown in buying. So is this the year, is this the time to buy or sell a house?
Well, I think you'd still rather be a seller right now if you have somewhere to go, because prices are absolutely inflated and something's got to happen here. Mortgage rates have gone, the 30-year has gone from 3% to 6.5%, almost 7% in just the last year, while home prices are going up, and that can't sustain itself. So if I was in a quandary right now, I'd rather be on the sell side as long as I had somewhere to go. But then you have, that question of, well, if I rent, all these rental prices are through the roof. They're up considerably. So where do I buy? So it's a very tough decision to make right now for buyers and sellers, but I'd rather be on the sell side.
And meanwhile, the big word that, of course, we're hearing for in this year is recession. In your opinion, do you think that the U.S. is headed for a recession this year?
I think we're already in a recession. I think we've been in a recession for the last 6 months now. That's gauged by some economic metrics that the Treasury uses. But if you talk to Main Street USA, there's no question we are already in a recession. People are pulling back. People are buying more generic products now because they just can't afford other products, and they're not buying big ticket products. So I believe we already are in a recession. I do think that we can avoid a major recession, as some people were kind of fearful of. The Fed rates that we've seen going up, that's about to come to a halt. They are going to raise rates again this week, more than likely 1/4 percentage point, which is lower than what they've done over the last year. That should help somewhat, just bringing prices down and bringing spending down overall. But yes, we are in a recession. I expect that to last for most of this year, but I don't think it can be it will be a big drastic drop off both in the market and for Main Street.
All right, Scott Bauer, CEO of Prosper Trading Academy. Thank you so much for your time.
Thanks. Have a great night.
Here's a question.